All right, welcome to the show, guys. Let's see, notifications are kicking off. Hope the audio and everything is good. And let's see where we go. Where we go with this. Right. Let me get the live chat on. And let's go. Right. So today we're going to talk a little bit about the current market. You probably can see the little picture I have in the back. Doomsday, global ending disaster, whatever you want to call it, right? So this is not Armageddon. Sorry, my bad. What you have to understand is what's happening right now in the market is something we have to naturally let happen. So you guys should know very well that I'm a massive fan of Bitcoin. I follow the entire market by just following Bitcoin. I know what's going to happen just by following BTC. I don't focus too much on the altcoins or anything. Of course, I dabble, I'll play around, I'll invest, and I'll take my initial investment out as soon as possible so it doesn't hurt me, because the biggest losses happen in altcoins. It happens when you lose focus in the market structure. So for me, the market structure has always been Bitcoin. In the future, I may change my stance when BTC is less dominant. Of course, I would do this, but until then, BTC is the only way forward. Mohammed S, happy Eid to all. Welcome back. Thank you, my brother. Eid Mubarak to you too. Thank you for coming to the show. So that's the situation that we have, right? So election over, resume as normal. Definitely. Election wise, I think I'm gonna be a candidate next season. I don't see a reason why not, right? Just go out there. We're gonna call it the Meta Party, and yeah, you can join. Our party lives on the digital domain, and I'm not joking. I'm serious. We're gonna create an actual political party that's non-political in the metaverse. And I'm going to be the mayor of that party. Why not? So if you guys want to come and throw your vote, I don't see a reason. I'm sure we can actually integrate parliament structure into it as well, and definitely have some sort of a say in the actual government. It can be done. You know what? There's nothing is impossible. And of course, if we do it in the decentralized world with actual verifiable votes, listen, nobody can manipulate that. Nobody can rig that. As MDS says that it's been rigged. Of course, they're always rigged. You're not elected, you are selected, right? Ultimately, and the only other time someone does get elected is complete random reasons, like mostly like a fluke or something, because nobody else actually bothered coming out to vote or something. So, but anyway, you guys did well. I mean, I'm glad that I could say that you guys did fantastic. Next time, it's a good experience next time. Anyway, let's leave the politics behind. Let's move into the markets, because that's what we're here for. So number one, I want to show you this chart again. So obviously I've been showing this chart for God knows how long, and I've said to everyone, I said, look guys, there's my chart link. Take that and just follow along, just tag along, copy everything, make a copy for yourself. Of course, I do apologize. I know a lot of you guys do not use the premium version, and you're not going to be able to see half the stuff that I have on the indicators. But guess what? You don't need those indicators, right? We can right now go ahead and delete all of these or switch these off, right? They do not matter. Absolutely do not matter at all. You see every single indicator off. What you require is this drawing here. This is what we were talking about. We looked at the range. Let me also just change this as well. Give me a second, guys. Make it smaller. I'm going to put it down here somewhere. You can take a screenshot later. I don't care. Right. For now, this is what we're looking at. And we also don't want to start looking at the daily. We want to start looking at a higher time frame, weekly, monthly, 2 weeks, maybe even 6 months. Who cares? We want to look at higher time frames. And once you start going there, you'd realize that we have these lines. We have these beautiful lines drawn here, coming all the way from 2017, right? So you start noticing these lines. It's like, okay, why did this guy draw a few bits and bobs and then make these lines and leave these lines there? Why did he leave all of these lines there and never talk about them or do anything? What's the significance of these lines? Nobody's asked me these questions. You know, the lines have always been there. These major lines have always been there on this chart. I couldn't be more transparent with you guys. Now, so we're on the monthly. Okay, we'll go back to the weekly in a second, right? We're in the monthly. What are we expecting? This is the key here. What are we expecting? What do we think this market will do? How low can it go? You've seen people on Twitter, you've seen people on other social networks with massive followings telling their followers that we're going to bounce around this particular area, this 28, 29K, and I'll show you what I mean. So again, we're just going to focus on this candle here. So if I activate this, you can see between 28,700 and this 29K, that's going to be the range where we're going to bounce. Was it new news to us? No. Why? If you followed this channel, if you had this chart, you would have had this drawing, this actual drawing on your chart for you to follow through and actually copy and, you know that this is what we're expecting. So that's what we're expecting. But is this the ultimate? What happens when we actually come here? Okay, because we're always expecting something, right? But one of the things is sometimes it's what you don't expect that you should be expecting, right? I always say this, expect the unexpected. So we're all expecting the market to come here, but we seem to forget one fundamental fact. What goes down will always go down, right? Until it starts moving back up. I know it doesn't make any sense. It's like, what the hell is this dude talking about? Well, we're talking about candles. When a candle starts moving in a particular momentum, it's always going to go in that particular momentum until we create a baseline for us to move back up. So we know that if we come and touch this 28K level, right, and this is on a monthly, guys, so remember 28K, it could be 27, but the point is we could come here. Now, if we do come down here and we touch this, then the probability for us to go lower is actually higher. Now, the probability ends up taking us to this white line. And we could even wick down all the way to this line here. And look at this amazing coincidence, what this is. The amazing coincidence is this was the peak of the previous bull cycle. So where do we expect the bounce, the actual level to come and stop? The previous bull cycle level. So it's awesome, amazing stuff. It's absolutely insane what you're going to see on these charts. I know some people are trying to talk to me on Discord. Guys, I'm not on Discord right now. I'm on YouTube, so it will be really awesome if you can actually stick to YouTube instead of going to Discord and sending me a message. If I'm live, I'm live. Right, let's go into the charts. Oh, sorry guys, spice. Right, let's go into this. Right, so this is the kind of stuff we're looking at, right? So we're looking at how this market, the structure has been built where the previous high was. Now we know that this would be our ultimate low point that we could bounce out and then move forward. And also if you look at some point, I forgot when, but I did do these drawings as well. I did do these drawings some time ago. Again, my charts, I do not update them. I do not get rid of them. I don't change everything every day. No, these are longer time frame. These are how we understand what the market structure should be. So we can see that our market structure has collapsed, right? So we've come here and what we've done is this instead of going this particular direction, right? So we've come and done this now. So now what we've done is invalidated this particular point. This means we're going to come back to where we started. Very simple. And in a market cycle, where we started, I know can be very confusing. Somebody might say, well, what do you mean by where did we start? Well, this cycle started the moment we went above this level. The moment we went above this level. And of course, you might be asking, well, what is all of this? Why is there a line in the middle of this? Well, if we start looking at the weekly, it will make more sense to you what this area is. This was an area where there was a peak down here. And there was this candle here where we took over. Again, it's been on the chart forever. Right, this was that moment where we came back and we started creating a higher high based on the market structure of the current cycle. So remember, there's a cycle within a cycle. We could have monthly cycles, weekly cycles, daily cycles. On a daily, weekly cycle, we came here the first time, we invalidated these areas, and we first time came back to challenge this specific area. So what was this specific area? The actual baton zone, to confirm that we want to start moving back up again. So you can see the difference wasn't much. It was only a $3,000 difference. But that difference was what we were looking for us to confirm, are we going up or are we going to have a fake out and come back down again? So we had the confirmation that we want to move up. That's what the market did. And if you look at this as a measured move, the percentage that we did from that particular week all the way up to the peak was 323%. It's very simple maths. Right, however, I know everything looks awesome, 333%, whatever, Sham, you're talking about this. But what did we just do right now? Did we just cancel and come back down all the way down here? So how far did we come? We came back down, excuse me, 53% according to this. However, I have to correct you guys because this is not accurate, right? Why isn't it accurate? I'll explain to you in a second. Give me a second. So if you start looking at the wicks of this particular chart, and I'm going to get rid of the drawing. If you start looking at the wicks, yes, we hit 69K. But the fact is we were down here. So the highest that we went to was actually $65,000. This is the fact on the chart. So the fact on the chart says $65,000. So if we look at the fact and we do a measured move down to another fact where we are right now, that gives us exactly 50%. Now what this means is, this is so funny. We are actually officially still inside the bull market. Because right now we could easily flip over, start doing some positives, and we're great. It's only when we start canceling these areas. However, of course, I'm being bearish. Okay, let me explain why. Because what we've done is we've had all of this structure and we've come back here, right? And we're actually challenging this particular zone. You see this particular zone here. This is a major support zone where we've had support here, support here, support here, support here. And we're now challenging this particular zone. And I've got a feeling, strong feeling, that we are going to come down more, right? And this is all based on what I'm seeing on the charts, right? Solely because when I go to the monthly, I see that on a monthly, I have already invalidated every one of these candles and got a body sitting below this. That's the key here. When you start looking at these higher time frames, you notice every other month was a higher high, higher high. Then we first time created this and we were bearish during that time. Then we became bullish, absolutely fine. And then the bearish sign started, and now we have a confirmation that the market wants to go down. So we already know what we're going to do. We're coming, we've already challenged this body, the fact, and we've come down. So we know this data for us is solid, right? So that's what it is. And this is what I wanted to show you guys. You don't need drawings and this and that. I know a lot of you guys complain about like, oh, we don't have your, what do you call this? Your indicators. Guys, you don't need my indicators. You don't need any of my indicators. That's what I wanted to show to you guys. You do not need any. In fact, there's one indicator, I believe, that is still sitting here somewhere. Where is it? Yeah. Just want to show you. You don't need any, right, guys? You don't need any. If we can switch off every one of these, you don't need any indicators. All you need is the drawing, is the lines, because that's what gives you all those levels. Right, let's move out of here and go into somewhere else, because we know what's happening now. We know we're coming to challenge this, and we know we're coming down. And when we come down, we know we could potentially come all the way down here. So I hope this is clear for you guys. Right, who's this? Albin. Watch the new Doctor Strange movie. We talk to you later. Okay, dude, no worries. Right, so that's the situation here. Right, now let's go to another chart. Now this is a Bitcoin logarithmic chart. It's on a weekly right now. Drawings are switched off. We don't need the drawings. I will switch on the drawings in a second. I'm going to put in a higher time frame so you can get a bigger picture of exactly what's going on. So on the bigger picture, what you can see is every single time we do come back to touch these green zones. We've talked about this. We said when the market starts turning a particular way, all you have to do is be patient and wait for these areas to come. So what's happened here, and let me zoom into this a little bit more. So what's happened here is you've got BTC coming down here and dropping below this, and almost sometimes even touching these white, this white line here. It happens over and over again. However, it does wick down. If you look carefully, it does wick down. So, I mean, some of the best wicks were these ones here. Of course, we're not going to expect any of that, but somewhat. Now, this line is not fixed. It's based on a Fibonacci level, right? It's not fixed. So I'm expecting for us to move sideways for a little while. However, I am expecting one more, at least one more candle to actually take us down. You know, one or two, maybe even two, but one more at least to take us down. Because we have, in this month, we have approximately about just over 2 weeks remaining. That's a fact, right? We have just over 2 weeks, maybe even 3 weeks remaining, close to, well, it's not 3 weeks, it's just over 3 weeks. Sorry, 2 weeks. And then we have end of next month. So this candle will close within the next 2 weeks, just over 2 weeks, it's going to close. Then we're going to have one more candle, and that candle will close. So we have 1.5 months where we have 2 candles. One is going to be this one, and then we're going to have a second candle that's going to close. From that point onwards, market structure, according to everything we've seen, should start moving back up again. So what are we looking at right now? When we start talking about market structure and saying, oh, this is going to happen, that's going to happen, what the hell are we talking about, right? We can actually take these points from previous history and say, well, maybe it's one of these, right? Let's take this. So let's take this area here where we had a peak. Okay, we're going to take a peak from here to here and just copy that peak. That's all we want to do. Just copy that peak. Let's copy that peak from where we were. So we took it from one peak to another. And if we just leave it on this peak here, well, there we go, this peak here. And I can't do it. Okay, let's do something else, guys. I'll refresh everything later. Delete all drawings. There you go. Delete all drawings. And now let's do this again. Because this is very important, right? I know a lot of you guys need to understand how peak to peak work and how we also do this as well, right? How we can take it from the bottom here sometimes and then go back to the peak here, right? So I've got 2 patterns here. One, I've got peak to peak, right? Oh, come on then. Right, this is peak to peak. We're looking at peak to peak, and you can see pretty similar. And then we've got this one here, which is from the bottom to the peak. So according to this, right, if you just look at this, how you see the peak to peak, you can see that the cycle itself pretty much played just as it should, right? It played just as it should. We should have peaked out somewhere around here. Yes, we did peak out somewhere around here. We should have peaked out somewhere around here. Yes, we did peak out already. We peaked out a little bit early, actually. So according to this, I've used the high and the low. So I'm not just being biased by saying I'm going to use the bottom or I'm going to use the top. No, I've used both. And both of this give us an estimation. So we start looking at this and we'll say, okay, if this is the monthly thing, this is what it's saying. This is when it should start coming down. Did it come down? And if it did come down, then what can we expect next round? So now what we're going to do is we're going to take a center from here. I'm doing this on the fly, guys. I'm not doing this. I haven't pre-designed this or anything like this. None of that business. I'm just taking it straight from here. We're going to do it on the fly. Go to the peak. And this is just data that we've just done right now in front of you guys. And we're saying, well, what happens if we have something move, make a move like this next month? And this I'm going to change the color as well because this is really important. Right, there we go, make it yellow. Right, so what you see here is next month we're expecting it to go down. This could possibly peak down to those levels that I've expected, like even this month probably, but that's what we're expecting. Actually, we can put it on this candle here. Right, so that makes more sense. Then we expect the market to do this. And remember, each one of these candles or bars or whatever you call it is going to be the same as one of these candles. So this is a monthly. This is monthly. So what we're projecting here, and this is not fixed in set in stone or anything like this, so please don't take this 100%. This could change anytime. We could have it within the next month, a couple of months from here. Maybe I mentioned September, maybe even December, right? But what we're looking at is a structure. That's all we're looking for. So we see this structure is going to come down. It's going to play itself, right? It's going to do this repeating pattern that we call, right? So just here, it's going to repeat itself. And then it's going to do this 1, 2, 3, 4, 5, 6, 7 candles probably, and then it's going to make the move up. So what that means is we could expect for a bull run to start within the next 6-7 months. And that puts us in line to December. So we know that the market structure is going to start making a move, and it's going to start giving us the signs around this area. So if we start looking at where we are now, this is May, June, July, August, September. What a coincidence. We actually put this line here, and this line gives us confirmation that around September, we're starting to move up. All that time, it's going to create these little movements, like little high areas, just like every other time. You know, it's going to be tagging along this white line here, just hugging it and moving along. While everybody's bearish, everybody is like, okay, this is doomsday scenario. The world's about to end. And around September, we're going to get that first confirmation. We're going to test this area. And I'm not making a prediction. I don't have a crystal ball. Anything I say here is just for entertainment. Remember this, right? I'm just a entertainer, nothing else, right? There's no financial advice here. So what you see is this area here. And I've just done it on the fly here. So, but point is that's what we're going to see. So right now, my advice, and no financial advice, is people should be ready for what's about to come. I'm not going to make this long because I actually have a meeting that I need to attend very soon. Of course, I want to leave some room for you guys to ask me some questions. So I will jump into the questions right now, because I did say ask me anything. But I hope this all kind of makes sense what we're looking at. We don't want to be biased towards one direction. We don't want to be over bullish. We don't want to be over bearish. We want to see the structure for what it is and replay those structures non-stop. Replay those structures. Every time we come here, we say, okay, we've had this. Now let's take another pattern. So we take another pattern, for example. Where is it? There it is. So we take another pattern from here, from the peak. All right. So we're taking a pattern from the peak to this peak. And we copy this pattern over, and we say, okay, next round, next time, what we're going to do is something very similar to this. Where is it? It won't even work. It won't even work. Anyway, but the point is once we get the log chart activated, we will start seeing patterns like this, where it's all about moving upwards. The supply, the demand, you know, the structure. That, I mean, there's a lot of people out there who are buying. More and more people are coming in, but it's just crazy. I see KR here, I see DB here. Guys, if you haven't watched it from the beginning, I recommend you watch it from the beginning, because there is some quick stuff that I'm putting on the charts you might be able to see. Right, I'm going to refresh my chart because I want to bring those drawings back. Here we go. Right, we've got our drawings back. Right, why do we need the drawings? Very simple, right? So these drawings are very, very important. So the chart I've been showing you right now, you've probably realized that, where is it? Yeah, so you've probably realized the chart, I had the log chart on, I had the log activated. Where is it? There you go. So I had the log activated, right? So we know exactly where we are. All of these things are fantastic, but the logs aren't really important because there's actually one other thing that is very important. So I'm going to activate that now. So if you notice on this chart, and I'll show you the log, I'll take the log off in a bit as well because it will confuse you. So what you've got is these two red lines. So I've used these two red lines. I'm going to get rid of the log now. Boom. So I've got these two red lines. I didn't really take into account the first peak or anything because this is when we just come alive. But then we started creating the structure. Now we have something to go back on. So what we've realized is the previous high was the bottom of the next cycle. And now we're getting this pattern. We're like, okay, we can see what's happening. So these tops kind of correlate with the bottoms. So we're getting this data constantly, right? What we see is this top is now this bottom. This top is now this bottom, and so on and so forth. We're seeing data being built right in front of us. And these are on the monthly. Remember, this is on a higher time frame. So when we start plotting these lines, this area from the entire history, and we say, okay, let's do a line on all the tops. So we're putting a line, this red line, on all the tops, and we put a red line here on all the bottoms. It takes us somewhere very interesting that our what do you call this? Our log chart doesn't, and I'll show you this. I'll show you this. So you see, when you activate the log chart, it stops around here because that's the white line. But remember what I said, the white line can adjust. So there's no rule saying it has to stay there. It could, next month it could be slightly lower. It doesn't matter, right? But this red line can't be changed because it's not dynamic. It's been put there manually. And what this red line shows us is the possibilities that even this month we could even come and touch this $22,800. We could come and touch this. And there's nothing telling us that we can't wick down all the way to down here. So I don't know if you guys remember, I put this and I said buy target zone probable. Now that probability is something we guessed some time ago, right? Why we're looking for wicks. If we don't get the wick, it's fine. We can still put a buy order around these red lines and we'll be absolutely fine. This white line, would have been our this is our support zone. But as I said earlier on, I feel that this is going to be invalidated at some stage. So that's what we're looking at now. One other data I want to show you. This is a hold on, let me switch this off. Not this one. I want to give you a different one, guys. Okay, let me get you a different one, because all we want to do is get a moving average, not the moving average line. I want to get a moving average, nothing more. Let me get you a moving average. Just a simple moving average. I just need the system ones. Where is it? None of these rubbish ones. There you go. Let's just get a basic system moving average, MA. Let's put a input into this, and we're just going to go 200. 200. And I'm going to make a few changes, so don't worry, I'm not going 200 months, guys. 200 months is going to be a lot, so we're going to go on the weekly. And we're going to activate this. I'm going to change the color a little bit. I'm going to make it, yeah, that's it. Let's do it like this. Right. So all we're doing, very simple. You just seen me do this on the chart, right? And you've seen how I've taken this red line. Sorry, my bad. All right, how I've taken this red line from the top and then I've continued along. This is just a straight line going through the tops and the bottom, nothing else. There is absolutely no maths involved here. It's just the history, nothing else. And I've just activated the 200-day moving average right in front of you, in front of your eyes, if you're still watching. And what do we have here? I mean, is this a coincidence or is this fact? This is where our 200-week moving average comes and converges on the actual drawing itself. So I know a lot of you guys may ask, oh, when's the right time to buy? I can't tell you. I'm not your financial advisor. But this is what I'm doing. I'm following these levels. I've got the lines drawn in there. Give me a second, guys. Let me go and get some tissue. Give me a sec. Stay there. Right. Hello. Yes, right. So what it is you got to understand, it's not always about the indicators. It's not always about you know, what the what we see from the chart. Sometimes you got to just take these older data points, very old data points, and just use them. So we know that the log chart tells us that we are going to come down here, because remember, the log chart is dynamic, right? So it's dynamically putting the lines where it needs to based on the Fibonacci calculation. But sometimes we just need a fixed point of reference. And now we have a fixed point of reference to tell us where we're coming. And this is not a coincidence. This is how charts work. This is pretty much how charts work. Wherever you start a journey, all right, and what I'm talking about is a journey like this. You start a journey here, you come down, you move up again and you create this leg, or you come down all the way down here. Your journey will always, at some stage, come back to the previous point of reference. And the point of reference would be these lines here, this area here. These are all points of reference, which we also call support and resistance. And you can see this is exactly what is happening here. The 200 week is confirming it wants to come down here. So that's what's going on. It's freaky, right? But that's what happens. Also, I mentioned to you the other day, I said, and this is the same chart from that video. I said, guys, have a look at the index chart for the dollar and you see what's going on. And here you can see exactly what's going on. Exactly what's going on. So we know the dollar chart is actually showing us that the dollar is pumping, because when people are unsafe, they move into dollar, right? Can we still go lend 28K? Big boys allow it. What Sailor? What big boy? Bro, in this game, Sailor's not even a big boy, he's a small fish, right? Honestly, you need to, KR, one thing you need to do, and don't get me wrong, my brother, okay, I love you, but you need to understand something. You're being kind of brainwashed and manipulated by all of these stupid people, all right? I'm not, and I like Sailor, by the way. I like Michael Sailor. Yeah, it's all good. It's all, the little hype is great. But what you have to understand, the reality is Michael Saylor's not in control. Right? Michael Saylor's not in control. Yeah, he may be adding fuel to the fire or something like this, or, you know, getting on the buzz, creating a hype. And of course, he made a name for himself. Great. You know, we all love him for that. But he's not in control. He doesn't have the power to do this. He doesn't have the power. Someone 100 times less than him, and I'm putting this live on a YouTube, and I challenge Sailor to come and tell me otherwise. Someone 100 times more poorer than him has more control over the market than he does. And you might say, what the hell is this freaking guy talking about? Well, let me tell you. With Sailor, he buys OTC. Any one of those twats, right? That's what I want to say. I don't want to swear because I've been warned by YouTube many times. Any one of those guys who are the institutional buyers, ARK Invest, this invest, that invest, Michael Saylor, Coinbase, you name it, every one of those a-holes, they buy OTC, knowing very well it does not help the market. They know very well. However, when they come to dumping it, they will do it on chain. Are they there to help? No. They are here to benefit from the hype and then dump back to the public so you buy on chain. The people who follow these guys are the biggest losers. Why? They will always dump on you. That's it. Very simple. I hope that makes sense to you. What's Saylor going to do? I'll tell you what he's going to do. When he sees a big discount, he's going to go and put his company on whatever, get more convertible notes. And he's going to get more people's money, and he's going to invest that money. That's what they do. That's what they do. As long as they have a product in place, an insurance in place for people's funds to be safe, people will always invest. Do you understand? They're not geniuses. They just figured out how to work with the regulators. That's all they did. And they're okay with that. Think about it. That's all I'm going to say. Just think about it. All right? I'm not here to tell you what Saylor's going to do or anyone's going to do. I'm just here to show you what happens. And this is another reason why I don't even come to YouTube that much, because I get asked a lot of questions. I'm like, well, for what? I'm like repeating myself. You know, See the bigger picture. Don't fall for that daily fly trap, I would call it, right? Don't fall for it. There's a bigger picture. The bigger picture is we buy for the cheapest amount. We sell for the highest amount, while everybody in between is either worrying or either happy and excited doing whatever. Last season, before Michael Saylor came in, I beat him to the race. Think about that. When we exited, we beat him to the race as well. Think about that. Why did we do that? Did we want his hype? His hype came after us. And it goes for any one of those influencers out there. The hype comes in after we've done our bit. And here I'm trying to give you guys a rough idea, not a financial advice, of what to expect. That's it. As I said, I'm an entertainer. Call me a fool, call me whatever, it doesn't matter. I don't shill. I don't do none of that business. You know, I've been transparent as possible. You guys know me on Discord. Some of you guys have my number. Whenever I've bought, I said I've bought. When I've sold, I said I've sold. Whatever I've done something, I told you guys. Has Michael Saylor told you this? So yes, as I said, I respect those guys, but there is no big boys. As I said, someone 100 times, even 1,000 times poorer than him has more power than he has because he's doing it on chain. People like him are not big boys. Trust me. Silent sweep. Awesome, my brother. Nice to see you. I hope, KR, you don't mind, because this is the reality, bro. This is the reality, right? You know, hype is great. Hype is great, but let's not fall for the trap. Let's enjoy the hype. Let's enjoy the moment. Okay? So I know you said, can we go lower than 28K? Yes, if you watch the video from the beginning, yes, we can go lower than 28K. I've given my targets already. I've posted on Discord. You can see it from there. Percentage-wise, what would you say? You've been 100% right all year. Is it a year? It's more than a year now, isn't it? I mean, we started this channel back in November. I believe it was November or December 2020. So we've gone beyond that. Every target we've ever had, we've achieved those goals. So question is have we been accurate 100% for the last year or longer than that? Did we project what's going to happen in the market and at what stages, what to expect? Even though these candles never expected, I just did something just moments ago. I showed you guys a chart and I drew all of these, whatever it was, these gimmicks I drew there. And same again, what do we expect? What can we expect? So I'm not trying to be right, and I don't think anybody's wrong. All I'm saying is just stay calm. Don't panic. Don't rush into stuff. And be careful who you follow and why you follow them. If you're just praising Michael Saylor for what he does, I do the same. I respect him, I like him. But that's about it. I won't fall for that hype trap. Right? If you're like, for me, if you're following me for the honest truth, then that's all you're gonna get. There's nothing else. There's nothing else I can offer you. I can't offer you to be excited, to be happy. I can't offer you, oh, Bitcoin's going to go to $1 billion. I can't. Silent is keep on getting deleted. Whatever he's trying to type, it's not working. Right. Try and say it in a different way, bro. Maybe that would work. I don't know what's going on, but you are getting kicked off for some reason, or deleted yourself. Anyway, so that's what we've got. Right, let's go back to this chart because these are important charts. These are very, very important charts. So I'm going to get rid of all the drawings. I'm going to go on a weekly and I'm going to activate my drawings now. So this is just a simple support resistance cluster that we use, SRC. It's one of my own indicators that I've shared to you guys before. So what would it be, right, to dig deep into my pockets or wait a little longer? wait a little longer. That's what I've just said. If you watch the video from the beginning, bro, you'd have seen what we've talked about, because we've come to a particular structure, and look at the structure. It's such a beautiful structure. Look how we were here, we came down, we went up, we're down here. We might even come up to test this level here, but this is a consolidation zone, and this is telling us that we could potentially come and test this area. On the weekly, what you're seeing is there was a little bit of a support zone here, very small. Look, these were wicks, and we had two candles here which also did it, but it wasn't the best. But the point is that's all we had. This is a really small support zone, and we broke below this, so we invalidated this. Now we're heading straight down for this level here. I'll take you through a smaller time frame so you understand more, you see more data. Right, so this is daily. Look what happened. We broke down these small zones. We're coming in for the major support area, which is currently sitting at 2,870, something like this, or 700, 28,800, sorry, 28,800. So you can see, you know, where the support zones are. So from 31 to 28.5, I'll call it, right? That's what we're coming in on the daily. Now, if we start changing our time frames and start moving through the higher time frames, you start seeing a better data. Look at this big support here based on these candles here, but we broke through this. Now we're coming straight to test this. So you know we are coming to test this area. That's where we could try our luck. So Silent, this one's for you. We could try our luck, but is this viable? Is this it? Or is there another area we might possibly go to? So now we're going to move over another day. We're going to go to 5 days. And what do we see on the 5 days? We see that we have broken through the first one, and we're coming for the next one, which is at 28,500. Wow, not bad. So 28,500, that's where we're coming. So we know the data we're getting, it's giving us information to say that's the indication. That's where we should be expecting things. Again, same on the 7 days. Again, same area where we should be expecting things. Just turned in. Thank you, bro. When those buy target zones are hit, what do you think your breakdown will be? BTC, alt, etc. For example, I'm thinking mine will be 60 BTC, 30 ETH, and 10 alts. I've always been 90% BTC, my brother. I'm always 90% BTC, and I am planning to work on 5% Ethereum. So for me, when all of this structure's done, and also I have to add paradexes there too. And trust me, I'm not shilling paradexes or anything, but I'm just telling you guys, trying to be transparent. My total portfolio is always going to be 90% BTC, working on 5% Ethereum. It's not there yet, but I want 5% Ethereum. I want to have 1% at least paradexes. Now, understand where I'm coming from. 1%. 1% could be the whole supply, right? But 1% in valuation to BTC and Ethereum. So that's the whole idea. It's like it could be worth 10,000, 100,000, a million, whatever, but it has to be 1% in valuation to BTC itself. That's how I want to work with it. And then you've got another 4% of all sorts of shitcoin. However, I will always keep maybe about 1.5% of fiat, like USD. I do keep USDT, and those are the funds that stay on the exchanges to buy these dips. So you can see my alt portfolio is about 1.5%, 2%, maybe 2.5% max. That's it. I'm never going to go beyond that. So you can give me 20,000 different crypto. It's going into that 2.5% portfolio. That's it. Not interested. Because why would I want to bet on horses that haven't been tried and tested? Number one. We don't know the riders. We don't know if the jockey's any good or whatever. Why would we want to try all of this? We'd rather be on the winner. So for me, I'm just going with the winners, if that makes any sense, right? So that's going to be my percentage. That's just me being transparent. But I do like your idea. I think your strategy is very good. 60, 30, 10 is actually very, very good. My alarm just went off. That means I've got to soon go, because I do have a meeting scheduled regarding paradexes finally. So again, I'm not shilling anything. I'm not here to shill or say anything. So just a quick one. So we got the weekly here. You can see what the weekly is showing. You can see what the monthly is showing. This is the 2 week. Wow, 2 weeks. We don't even have a resistance here. Anyway, monthly we don't have one because we already broke that. I see, and it makes total sense. Thanks for sharing your perspective. Much appreciated. You too, my brother. Thank you very much. Right. Thank you very much. I'm going to go back onto the weekly. Actually, I'm going to go into the 5 day because 5 days is quite cool because it's like an average. I like 5 days. So let's stick around on 5 days and see what 5 days is showing us. All right, this is 5 days. So let's look at this 5 day zone here. And I want to activate a few indicators for you. One thing I want to activate is the zigzag high-low. And what we can see, and this is very important, right? So guys, focus on this candle here, and this candle here. If this candle beats this candle, which is exactly on this blue line here, this 28,700, then it's an official bear market. Full stop. There's no ifs and buts. All right? Because I know a lot of people think we're going to have this perfect W. No. A W always has this corner lower than this corner. So the angle, this is lower than this. So yeah, if we do a rally from here, by all means, the bull run doesn't end. We're still in a bull market. However, if it comes and invalidates this, even by a millimeter, whatever you want to call it, right, it just comes down, then we broke the structure. That means we're going down. Very simple. We're going down. So keep an eye on this as well. So this is something I wanted to show you. Zigzag higher low. VPVR, I mean, there's no point even switching it on. VPVR, look, we collapsed. We collapsed. We've gone down. There's no ifs and buts. There's nothing here. There's absolutely nothing. No structure, no money, nothing sitting here. So this is a way of indicating where's all the money. All the money's been here. All the money's been here. The money has died out. There's no money. Look, dead. It's just easy way to look at it. So let's forget about this. Let's not depress everyone. Now, we can look at, this is the 21 EMA. But we're doing it on a 5 day. Of course, on a daily, it's a lot better. But let's keep it on the 5 day just for now. Actually, no, I don't really want that. Give me a second. I'm going to activate the 50 and the 200. So we activate the 50 and 200. And what we see is the 200 on the 5 day is pretty much the 2,800, which means there's a big probability that we might actually see a bounce here and then shoot up again. But because we are bang on this line, as I said before as well, the likelihood of us going down even further is actually a lot higher. And that kind of takes us around this area, 13,900. So we can break down very fast. So I wouldn't hold on to this one. Now, if I take the same data and put it on the weekly, on the weekly, you can see that the support is here, but the 2 week is here around the 28,800. I've mentioned 28,800 to you guys on Discord. This is exactly why I've mentioned this number, because for me, that makes total sense. It's like, okay, this is definitely possible. This is what I should be looking at. You know, we don't calculate the moving averages on 5 days, 4 days, 6 days, or whatever random day we pick. We can do an average calculation based on those days, based on the 2 day, the 3 day, 4 day, 5 day, 6 day. But when we're looking at structure, we're looking at daily, 7 days, monthly. That's what we're looking at, right? So we want actual numbers between these. So just trying to make it clear for you guys. That's what we've got. Right, now let's get rid of this and let's bring in one more. So we want to go to 5 day. Sorry guys, I'm just trying to show you some stuff that you might actually enjoy. Where is it? What? What's going on here? Interesting. Let me refresh, guys. And my charts decided to bug out. Okay, this is the last one we're going to do, and then we're off. So you can see this is how I look at my charts, by the way. This is how I prefer just to look at my chart. Everything, all the data here to tell me what's about to happen. Right, forget all of this. Let's go back to 5 days. 5 days, switch everything off. Get rid of even this. Everything off. And we're going to leave that. And we're going to get rid of this as well. And we're going to get rid of this. Right. And we're going to get one particular indicator. This is called the Gaussian channel. Okay, Gaussian channel. And we want to use this on a 5-day. Very simple, because we're looking for the average, right? So once upon a time, you guys probably would have remembered, I've talked about how there's a specific area where you go, you end up selling your house, right? We're entering this zone. Now, that particular indicator that I used is known as a fisrt, which I'm going to bring in as well. Huh? Where is it? Interesting. Interesting. That's how bad it is. I haven't been there for so long. So Fibonacci, fisrt has vanished. Let's try zero. Yeah, there we are. So someone's changed the name basically. That's fine. So we've got it on the 5-day. Now, this is very important, guys. Very, very important. So on the 5 days, I can switch off to a weekly. It doesn't make any difference, right? What you need to focus on, remember when we talked about how this is like quicksand. When it starts pulling down, everything starts going down. And the reset point is usually this red area here. And you can see that 16,000 level that I've been talking about correlates. So what we know is it is going to come, it is going to touch this area, but it can potentially wick through. So this is where we would have our perfect buy. Again, I'm repeating, I am not a financial advisor. Do what you do, but this is what I'm seeing based on the charts, based on the patterns, and patterns that you could use yourself. You don't need a million different indicators. You can delete all of these indicators, every one of these indicators, right? You can delete them and you're absolutely fine, because this will give you a rough guidance to where it needs to go. Okay, so that's what I'm seeing. Obviously, you know, when you overlay them, you can actually see exactly where we are. But what I wanted to show you was this area here. Where is it? Boom. Right. So what you can see is this yellow area here, this yellow zone here, right? This yellow zone here. We do spend some time below this every now and then, and this is the perfect moment. So when we do go into this red zone, this is like the time you should start to buy as much as you can, do whatever you want, because historically, whenever we've come out of that zone, we start being bullish. So you can see red means bearish, and then green means bullish, right? Green means bullish, red means bearish. Same thing has played historically. So remember, the Gaussian channel is a very, I mean, it's an easy way for you to see. It's not the best. It's not 100% accurate. Okay, you can flip around the days a little bit, you see different data. It's not accurate, you know. According to this, we're still in a bull market. Remember, data is a daily, weekly, monthly. These are data. According to that, as I mentioned to you, officially we are not in a bear market. When this turns red, we are in a bear market. Just to kind of improve on the signal, if you take it down to the 5-day, then you see this. If you take it down even lower, then you can see that yes, we have started being bearish. We want an average, and we want to see a little bit more accuracy. We want a signal to come to us before the signal. So before we become bearish officially, we want the signal. So here's the signal. That's all we're doing. Other than that, guys, I'm not going to make this in longer. I don't see anybody on the chat right now, and I've got a meeting in 6 minutes. So what I want to do is I want to jump on my meeting, and I hope you all have a good day. And I hope everything made sense, guys. Listen, end of the day, everything that I've shown here, I'm happy to show you guys on private WhatsApp. I've offered my help. I've said to you guys on Discord and everything as well, and all the groups as well. I said, look, guys, if you're feeling uneasy, if you're not seeing the bigger picture, call me. That's what I'm here for. I'm here to explain these things to you. I'm here to give you the tools for you to see it yourself. I'm not that guy who's going to come in, put a screenshot in front of me and talk about it all day long. You know, I'm not that guy who's going to come here for 2 minutes, make a 5-minute video and leave you hanging. I'm not. I'll show you. If what I do can't be repeated, then what I'm showing you is worth less. Simple. It's a very simple rule. If I'm showing you something that you can't repeat yourself, then this whole video is useless, worthless. I know people probably don't like the way I talk, but you know what? I don't care. I'm being honest. If you don't like me being honest, can't help you. Can't help you. But yeah, other than that, guys, listen, I'm not going to make this any longer. I got to go. But you just be careful, guys. Be careful with everything. Your emotion, your sentiment, your psychology, who you follow, what you do, what you take on board. You know, understand it for each thing. There's a time for hype. There's time to be excited. There's a time to understand that it's not going to help you. Ultimately, there's one thing you have to understand. Your money is yours. Nobody else's. You have to control that. DB says, always, thanks for being you. I really enjoy your analysis. Thank you, my brother. I try to be as honest as possible without putting any, sweetness, any cherries on top of the cake. I'm not here for that. That's other places. That's not me. I've never come to YouTube to grow the community. I've never come to YouTube to earn any money or any living from it. I don't have any reason to be here, right? I'm only giving the information to the people, and if people don't want the information, by all means, it doesn't matter. You know what I mean? I've got better things to do anyway. But I do make my time, as I said. You're just going to get the most honest opinions from me, nothing else. And literally logical opinions. But other than that, thank you very much for coming to the show. Thank you for everyone who attended. Of course, I did say AMA. I think you asked a few questions, but I didn't really get much. So what I'm going to do, leave that for next time. We'll do some AMAs next time. We can talk a little bit more and continue from there. Other than that, guys, like, share, subscribe, and let's see each other hopefully next Monday. And until then, stay calm, stay safe, and yeah, don't lose your funds. Adios, my amigos.